22 states in the US saw their economies contract in the last quarter of 2023. That's almost half of the United States that is currently experiencing negative economic growth. But when we look at nationwide numbers, GDP is still growing at a healthy 3%. The unemployment rate is still at one of the lowest levels in over 50 years. And the stock market has now printed new all-time highs for 6 consecutive weeks. US recessions, which you can see from these gray bars here, typically mark reversal points in the stock market. As the economy contracts, company profits decline, leading the market lower. But right now, the stock market is behaving as though we're experiencing a period of exceptional economic growth. And that's despite a significant portion of the United States currently experiencing an economic contraction. In fact, only 20 out of 50 states are actually experiencing economic growth today. As you can see from this chart here that shows us the number of states that are showing increasing economic activity, we're currently at one of the lowest levels since 2020. And in the past, when we've seen less than 20 states experiencing economic growth, that's usually been accompanied by recessions. This data is based on an index that's made by the Federal Reserve of Philadelphia, and they measure the economic activity state by state. They look at the unemployment rate in those states, they look at the average hours worked in manufacturing, real wages, and total non-farm payroll employment. And many are pointing to this data set to suggest that the US is currently entering a recession. The idea is that a recession doesn't happen overnight with all the states entering a recession at the same time. Instead, you see the weaker and more vulnerable states head into a recession first, and ultimately, once you've hit a certain threshold, it becomes inevitable that the rest of the states also go into a recession. And this chart helps us understand where that threshold is. Today, we have 22 states that are currently experiencing an economic contraction. When we look at the very beginning of the last 6 recessions in the US, this is how many states were in a contraction at the onset of these recessions. So that yields an average of around 26. We can say that when around 26 states, so more than half of the states, enter an economic contraction, it becomes inevitable that the US enters a recession. So today we are at 22 states. We haven't hit that threshold yet. Of course, it looks like we are approaching it quite rapidly. It could be that in a few months, 26 states will be in a contraction. So would that guarantee that we see a recession? Or could we see something like what happened in 2022, where 26 states were in an economic contraction, but that proved to be a false signal because the US never experienced a recession and all of those 26 states came out of a contraction in 2023. Is that something that we're about to see today? And that's a fair question. As I said at the beginning of the video, GDP is still growing at a healthy 3% per year today. That's a higher level than the average growth rate we saw following the financial crisis, and real means adjusted for inflation. So this doesn't look like half of the US is currently in a downturn. Now, the first explanation is simply that certain states make up a larger portion of GDP than others. It can offset any decline in economic activity we may be seeing in numerous other states. For example, California, Texas, New York, and Florida together make up $8.8 trillion in GDP. That is a third of the whole US economy. Now, out of these 4 largest state economies, only one of them is actually in an economic contraction today, and that is New York, which saw between a 0.6 and 1% contraction in its economy in the final quarter of 2023. California, Florida, Texas are growing quite steadily, on the other hand, and may be the states that are fueling the economic growth we're seeing in the US today, despite 22 states currently being in an economic contraction. Now, this isn't the first time that we've seen a large number of states in an economic contraction, but the US not in a recession. In 1991, in 2002, and as we said in 2022, we also saw many states in an economic contraction, but the US was not in a recession at those moments. Now, in 1991 and 2002, the United States was just coming out of a recession. And so some states were just slower than others to come out of those recessions and remained in an economic contraction for some time. That's not really the situation that we're currently in. The only time when this many states were in a recession without the US being in a recession was actually in 2022. In fact, 2022 was a great moment to be optimistic about the future of the economy and and buy beaten up stocks. Now, in 2024, of course, we're in a substantially different environment when it comes to the stock market. There are still many trades to make in this environment. You can find all of our current trade ideas and setups that we have on the stock market today on our website. We currently have around 15 active trades on the website where we lay out exactly what we're betting on. We teach you everything we look at to make those trades and guide you through them step by step from their initiation to their closure. The best part about it is that you can test out our service completely for free, something that's quite rare in this industry. Of course, 2024 is substantially different to where we were in 2022. In 2022, stocks were down around 25% from their all-time highs, while today the market is soaring. One of the key reasons why the economy was in trouble in 2022 was because of soaring gas prices. In 2022, the price of gas at the pump soared to $6 per gallon. That's almost triple what it was before the pandemic. Fuel being a big part of people's spending, this immediately made people completely stop spending. And this rise in gas prices is one of the key reasons why quite a few states plunged into a recession in 2022. But that was temporary, and those states recovered when gas prices came back down. But can we say the same thing about 2024, where all of these states suddenly recover from this tough period like they did in 22? Some are pointing to the fact that consumer confidence in 2024 has been rising. Over the past couple of years, we've seen very low consumer confidence, which could explain why some states have been struggling. But if consumer confidence begins to rise from current levels, it could mean that people are about to go on another spending spree. A recovery in consumer sentiment is actually something that we typically see following recessions. Consumer sentiment collapses during recessions, and then once the recession is over, you typically see consumer sentiment recover, and the economy is usually booming. This is actually an argument that we raised back in June of 2022 when we saw one of the most depressed readings in consumer sentiment. But the consumer had $2.5 trillion in excess savings back then. So despite low confidence and high gas prices in 2022, the US could actually avoid a recession back then. Today, however, we know that these savings are all gone. So without this cushion of savings to protect the consumer, it's difficult to see how much spending they'll do. And we see that very clearly when we look at something called retail sales. These went through the roof in 2021 and 2022, significantly above the trend in retail sales since the early 1990s. One could say this is the normal trend of consumption that the US consumer has had over the last 30 years. You can see in 2009, retail sales went far below trend, and over the next 5 to 6 years, retail sales caught up back to the trend because all of the things that people didn't buy during the recession, they bought when things got better. Today, we are in the exact opposite situation, where people have likely made all the purchases that they needed in 2021 and 2022, and there's a risk that over the next few years, we see this demand go back to the trend. If that actually ends up happening, it could be that we see a prolonged period of economic weakness, not necessarily a violent crash like 2008, but more of a steady period of disappointing economic growth. For the economy to continue growing as quickly as it has, we would need to stay significantly above trend. And so far in 2023 and 2024, that's actually what's been happening. So it is possible that we see a recovery in these states and that we are in a similar situation to 2022. Personally, we don't believe that's the case, and the fact that so many states are in a recession is an ominous sign for the US economy. The only problem is the timing of this recession. As we've clearly seen over the last year, timing a recession is incredibly tough. We've been much too early to anticipate a recession, and when we look at initial claims today, they're still moving down, showing that the labor market in the United States is actually still quite strong. This is not what we saw leading up to the 2009 recession, where initial claims were actually rising during that period. As long as the labor market remains strong, it's very hard to see a recession materializing in the United States.